Bloomberg Audio Studios. Podcasts, radio, news.
As frequent listeners know, we record this on Thursdays generally, and apparently we're going to get a biblically bad storm this weekend in the New York City area.
And you are like, yes, this is great.
I feel like we had a real storm this past weekend, and it was like criminally underhyped. I had no idea it was coming.
I was also surprised by this weekend's snow. I used to like snow a lot more before I became a suburban dad, and now it's like shoveling a foot of snow. It's no fun anymore.
Burrow into your heart. Try to find that childlike joy.
I try, but it's pretty deeply buried under.
I root for chaos.
Snow. Yeah, sure. You don't have to shovel the snow. I was talking to you before this, and you gave me the impression you had like 15 minutes of material on the snowstorm this weekend.
Mostly I just wanted to talk about like why was no one like there's been a lot of headlines like first big snowstorm of the Mamdani era, and it's like, are we all just trying to forget that last weekend happened? I feel like that was the first big snowstorm.
Our colleague Joe Weisenthal was tweeting about prediction markets for the snowstorm.
Oh, they're popping off, I'm sure. This is the first time I've ever felt inclined to get involved in a prediction market.
Really? You have an inside view about...
Oh, yeah.
We'll do that for Katie.
Speaking of folks writing in...
we got to get this out of the way first.
We have some JPMorgan material to get through. The first is a correction. And I mistakenly said in last week's podcast that JPMorgan CEO Jamie Dimon did not attend the JPMorgan Healthcare Conference.
Which you attended.
Which I attended. And I'm sorry, I was mistaken. He was in attendance.
Just not talking to you.
Well, the thing is, I was like acutely aware of his presence last year because we were recording in a hallway, which I guess was
just storming by.
I don't want to get myself into more correction territory, but he was giving some sort of fireside or keynote address. And the hallway that we were in was somehow on the route. So people were lining up behind us, and it was like an enormous scene. And everyone was talking about Jamie Dimon. So I was keenly aware.
Yeah.
Didn't have that experience this year, so I assumed that he didn't attend. But forgot
that guy existed.
You know what assuming does? Makes you make corrections on podcasts. We have another JPMorgan thing to discuss.
But before we do that, I'm going to say hello and welcome to the Money Stuff Podcast.
Right.
Your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
What else you got on JPMorgan?
Oh, I was just going to talk about the pub.
Oh, the pub. Yeah. Oh, yeah, you're going
this
today.
This is included in the banter.
I thought you were going to talk about...
The banter this week is very long.
It's the whole episode. It's just the weather and the pub. Although they did get sued for debanking Donald Trump.
Yeah.
On Thursday, which we should...
Yeah, we'll get there.
Leave it there. The pub.
Yeah.
The pub.
Yeah, I'm excited. I'm going tonight.
They have a pub at their office.
Got a resi.
It's been 20% of the content of this podcast. They have a pub at their office.
Yes.
Their brand new office.
Yeah.
Which you have given us some facts and figures about.
Yeah, I know so much about this office.
At that pub, they serve drinks, although allegedly not before 3 o'clock, I think we said.
I'm on the air until 5, so I'm going after 5. So I can't stress test that.
Yes, you will definitely get served at the JPMorgan pub.
I hear the Guinness is particularly excellent. So
you do hear that?
I have heard that. You can get screen printed on the foam, the building itself.
No.
Yeah.
Like you can get like latte art on your Guinness.
Yeah, I've heard that. I've also, I don't know if this is true. I'm excited to find out that you can get a screen printing of Jamie Dimon's face as well.
On your Guinness.
That's what I've heard. That's what I've heard. I'm gonna fact check all of this tonight.
In our show notes.
Yeah.
you will certainly order multiple Guinnesses.
Yep.
Get every available image.
Yeah.
Printed on them.
Yeah.
Photograph them.
If I can, if there's photography allowed.
There's photography allowed.
Am I even allowed to say that I'm going to the pub tonight? We'll hear by next week.
Issue another correction. Yeah. He did not go to the pub last week.
I'm pretty excited. I saw the outside of the pub.
Inside the office. You saw the facade of the pub on the town square in the middle of the JPMorgan office?
Exactly.
Excellent.
So now I'm working my way inside.
Working your way past the velvet rope.
Yeah. So that's what I had in terms of JPMorgan content. But you're right. We should briefly talk about debanking?
Yeah, I haven't read this lawsuit, but like I gather from like what I've read on the Bloomberg summary of it that it's not long on law.
Yeah, to recap,
perhaps I'm completely wrong.
President Donald Trump is suing JPMorgan and Jamie Dimon himself for at least $5 billion over those allegations that it stopped offering him and his businesses banking services for political reasons. Right. And they did for 7 weeks. They closed accounts of Trump and his businesses after January 6, 2021.
Banks shut accounts for various reasons. Banks have gotten in a lot of trouble for banking Jeffrey Epstein. Mm-hmm. They weren't like co-conspirators in his crimes. They were providing him banking services. And if you provide banking services to people who give off red flags of committing crimes, then you get in a lot of trouble, right? And after January 6th, it might have been reasonable for JPMorgan to think we don't want to be involved in banking people who have been involved in certain sorts of criminal activity.
Right.
But that sort of criminal activity is now associated with a certain sort of politics. So you can say, you were debanking me because of politics rather than because of crime.
Yeah.
It's all very upsetting.
It's a little bit interesting when paired with what happened to Brian Moynihan at Davos. Brian Moynihan.
He didn't get past the velvet rope.
Brian Moynihan.
He was not invited to the pub.
Being the CEO of Bank of America, the FT reported...
Also a notorious debanker.
Yeah, well, the FT reported that the White House excluded Brian Moynihan from a Davos reception that included the leaders of other banks and financial institutions. And one of the reported reasons was potentially debanking.
Yeah. Right.
The suspicion of debanking.
Right.
Yeah.
This is why, like, why I was not a successful investment banker and why at some level I'm not a good financial journalist. Like, no part of me wants to go to Davos. And like, if I happen to find myself at Davos, like no part of me would want to go to the Trump reception. But like, that's the job, right? Like, that's the job.
Well, Jamie Dimon was there. Jane Fraser was there. Charlie
Despite
Sharp
being
was
sued,
there.
Jamie Dimon was there.
Yeah, I know. I guess they had dinner and then
something went
Trump
wrong.
was like, you know what?
I'm going to tell you about my week.
Yeah, please.
I have a meme coin.
Yes, you do.
But you
didn't create it.
I had the opposite of have a meme coin. The meme coin was foisted upon me. Let me take a step back and tell this story. So a guy named Steve Yag, who's a software developer, launched this thing called Gastown, which is like a AI coding, vibe coding situation. It's like open source software that he announced and people liked and it got a lot of attention. And at some point, he did that January 1st. And at some point in the last couple of weeks, someone launched a meme coin called Gas on a crypto platform. And the idea is like, it's a meme coin that has the same name as Gastown. So if you like think that Gastown is a cool project, maybe you'll buy the meme coin, like whatever, right?
Yeah.
This is classic meme coin logic. There's no connection. The person who launched it wasn't the guy who launched Gastown. It's just like, yeah, they launched it on a platform. But the way this platform works is that when the token trades, it generates what they call royalties, like trading fees. And the royalties, some like whatever, like 1% of the trade volume or something. And the royalties accrue to someone. When you launch the coin, you can designate who gets the royalties. And the person who launched this coin said the royalties would accrue to the developer who launched Gastown. So there is a connection between the coin and the open source project. The connection is that the coin generates some money for the developer of the project, not because he launched the coin, not because he had anything to do with it, but just because they were like, we'll give some of this money to him.
It's sort of like a non-consensual connection.
Yeah. I mean, it's not exactly what people used to call an airdrop, but it's related to the idea of an airdrop in crypto where like someone just gives you a coin and they're like, oh, you have this coin, right? And why do they do that? Well, what happened here is that someone who was involved in or at least owned some of the crypto token emailed the developer and was like, hey, you have all these royalties waiting for you. All you have to do is like set up an account, connect your Twitter to the crypto platform, and then like you can withdraw something like $45,000.
And didn't he have to buy Solana?
He had to like open a Solana wallet to withdraw the money. So yeah. And he was like, that's weird. And then he did it. And he was like, oh wow, I really got the money.
I love the excerpt that you included.
Yeah. He was like, because it sounds like a scam.
Yeah.
It sounds like, yeah, just open a Solana wallet and send it to, but in fact, it was real, apparently. And he withdrew something like $70,000 of royalties. And then here's the important thing. Then he blogged about it. And he's got a big platform. People like Gastown. And he blogged about it for apparently a couple of reasons. One is that he thought it was good. He calls it an engine that fuels creation, just like the stock market. That is like, because this thing is retroactively financing his open source software project, he thinks it's cool, right? It's like, this is a way to fund projects through like crowd, meme, something, right? So one, he thought it was cool. And then two, the other reason he blogged about it is because that will get attention to it, which will, one, make the token go up. And I think he ended up buying some of the token. And two, create more royalties for him. So he actually wrote in his blog post, allow me to get richer just by telling you about it, which is like a good line. And so he did that. And I wrote about it because I thought that was funny in various ways.
Yeah, for sure.
He's not wrong that it's a way to finance something. I don't know that it's a sustainable way to like fund a lot of projects, but it is like in certain sort of crowdsourcey, meme areas of the world, it's a way for people to get money.
It almost reminds me of a Patreon.
It has some Patreon-like elements, but let me tell you like one reason that it's not like a Patreon, which is that he got tens of thousands of dollars out of this, but the market cap of the coin at some point went from like kind of zero-ish to like $40 million and back down, you know. The people who I think, I have no proof of this, just looking at the market dynamics, the people I think made a lot of money on this are the people who bought the coin cheap, emailed him, were like, hey, blog about this. He blogs about it, the coin goes up, and they make a lot of money selling it, right? So it is not just a way to funnel money to creators. It's a way to funnel money to creators while also giving a lot of that money to the people involved in the crypto trading. Sean Goedeke wrote a blog post about this with the title, Crypto Grifters Are Recruiting Open Source AI Developers, which is, I think, closer to my view of it than like this is a way to fuel creation.
Right.
But in any case, it's interesting.
Yeah.
I called it memecoin venture capital. And like, you know, as in regular venture capital, you know, the entrepreneurs get some of the money and the financiers get some of the money.
Yeah.
Right? You can quibble over the split of that.
And so how do you factor in Matt Levine?
I wrote about it.
Yes.
And then someone launched one for me.
Of course.
So I wrote about that in my column the next day, but I'm not going to name the coin or the platform. I do not want people trading the thing to generate royalties for me. For a number of reasons.
On the record.
One of them is
you heard
like,
it here.
As a matter of journalistic ethics and Bloomberg standards and everything like that. And another is like, I'm not going to log into the thing. Like, I'm not taking the money, but, you know, there's like supposedly $10,000 in an account for me.
That is an okay horse. You could do a lot with that.
I love that your conception of money is denominated in units of horses.
I mean, what else? How do you think about what you can do with $10,000?
I don't, because like there's no part of me that is tempted to get and spend this $10,000.
I mean, you'd have to put some work into it. But
I don't know that it's that much work, but it's like putting like passwords into some
into the horse, I mean.
Oh, to the horse.
Yeah.
Oh, I'm not going to buy a horse.
No.
That's not my
you're not going to
use of $10,000.
You're not going to take the money.
I'm not going to take the money.
I'm surprised there hasn't been some sort of Matt Levine meme coin.
There probably has been.
Yeah.
This is like the first one that I know of that like attempts to generate profits for me personally.
So something that I was wondering about as I was reading your initial...
I just want to be really clear. Don't buy it.
Don't buy it.
I don't want you to sue me if you like don't buy it and then it goes up. But to the extent you were buying it for reasons relating to wanting to help me or thinking that I will talk about it more, like don't buy it for those reasons. I'm not going to talk about it more and I'm not going to be helped by any aspect of it.
Well,
I don't own it.
You don't own it?
I'm not getting the royalties.
No.
I didn't launch it. I had no involvement in it. All I've done is talk about it, but I have not talked about it in an encouraging way.
No. A negative way, if you will. Speaking of suing, something that I was wondering about reading your initial entry when it comes to Gastown. Let's say that he was receiving no economic benefit from this meme coin and it has no actual connection to Gastown. If that happened, if you started a thing and then someone launched a meme coin that is connected only in name, do you have any sort of recourse? Like, can you sue them for trying to ride the popularity of your thing?
I think practically it's often hard to sue them. This came up a lot in NFTs. Like people do NFTs like linked to other people's art.
Yeah.
Like, you know, because you're just like, like an NFT is like an online pointer to an image, right? And you just take someone else's image and then you sell an NFT of it. People, I think, have tried lawsuits, but I think it's hard because these are typically somewhat anonymous, decentralized platforms and like they're not.
Yeah.
There's not an obvious person to sue. And, you know, I don't know. I mean, like, it seems like it could in some circumstances be a copyright violation, but like...
Yeah. What are you
going to wade into like some weird corners of the internet.
What are you going to do?
What are you going to do?
I just love the phrase moonshot.
Do you?
I think it's so romantic. Moonshot. Anyway, pay packages, though, is what we're talking about specifically.
Also romantic.
Yeah, so romantic.
There's a Wall Street Journal story about an Equilar study of, wait, let me try to do the math here. There's some CEOs who got moonshot compensation packages, which they defined as compensation packages that had like a notional value of at least 10,000 horses.
That's pretty funny.
I really
10,000 horses.
Yeah, or $100 million. I hope I did the math right. It used to be that CEOs got paid millions of dollars. And now there's a new vogue for paying them in a form that sort of looks like $0-ish plus a bajillion dollars if they hit some very aggressive growth and stock price targets over like some long period of time. And the idea is like, one, it's like a long-term alignment of incentives, and two, it is incentives to like do a lot, right? So it's not just like steadily grow profits. It's like transform the company or make it huge. And this is like, probably wasn't invented at Tesla, but it's very Tesla, right? Like Tesla in 2018 gave Elon Musk like people throw around the number 56 billion, I think, like, give him some tens of billions of dollar package if he grew the company 10x, and then he did, and then they gave him the money, and then we've talked about it a lot. And now they've given him another one that's like $1 trillion of extra equity if he goes to 8.5 trillion. And other people were like, ooh, Elon Musk did it. It must be cool. And so a lot of companies have done these packages. And what the Equilar study found is that most of those companies have underperformed the S&P. Yeah. Which, as I wrote, makes total sense because these are supposed to be like all or nothing moonshots, right? And like most of the time they shouldn't work out. And they're getting no reward for matching the S&P performance, right? Like that's not what they're there for. They're there to like 10x the company. And if they can't do that, then like they'll fall short and there'll be a bad payoff, right? And the idea of these moonshots is like most of them won't work out and some of them will work out enormously well. And so if you're a diversified shareholder, you'll get, the benefit of a few companies going to the moon. Do you think
the companies went into it with that attitude though? Like this probably won't work out.
No, but that's fine. Right? Yeah. Everyone thinks they're going to be the successful moonshot, right? But
of course.
But if you're a shareholder, if you're a diversified shareholder, like that's fine. You have like 10 CEOs who think they're going to get to the moon and 8 of them are deluded and 2 of them are right. And you don't know which is which. But you let them all try, The CEOs all think, oh, of course I'll do this, right? If some of them are wrong, like that's good for shareholders as long as some of them are right.
I really liked that framing, thinking about it through the perspective of a shareholder. And obviously my brain went to, you could construct a moonshot portfolio of these 21 companies or something that Equilar found did this. And
right. And a lot of them have underperformed the S&P, but some of them are Tesla.
Yeah, that's true. It seems like KKR, this is working out for them. Who else is it working out for? Airbnb. Also, which is interesting. Sure. It's specifically not working out for a lot of people, including Trade Desk. But it was interesting to see that Equilar was specifically looking at 2020 and 2021 packages.
Yeah, so excluding Tesla.
Excluding Tesla, but it does feel like a moment in time. I mean, maybe there have been more in the year since, but it feels like 2020, 2021, you did see a lot of these.
Yeah, that was apparently, there were more than before or since.
Yeah.
I think some of it was, the Tesla package was in 2018, but I think he hit the targets in like 2021, I think, or 20. And so there was a lot of like, oh, wow.
It works.
From the perspective of a CEO, it's like, oh, wow, I could make $60 billion. And from the perspective of a board, it's like, oh, this incentivization works and gets CEOs to transform companies.
Yeah.
It's a little weird to be a board and be like, well, our guy could be Elon Musk too. But it's, someone's got to be Elon Musk 2.0.
Well, it'll be interesting to see like what the lag effect of his most recent pay package is. Like whether, I don't
think anyone else is going to get $1 trillion pay package for a while.
No, you don't think so?
Who knows, man? I mean, the other thing I'll say is like, and I've written this about, his earlier pay package and his $1 trillion pay package is like the classic moonshot pay package is you're a early stage startup founder, right? And your pay is like ramen and 30% of the equity of a company that is now worth, nothing-ish and could be worth $1 trillion, right? Like that's the moonshot pay package. That's the package where in theory, every startup CEO is trying to create something out of nothing. And if they fail, they get roughly nothing. And if they succeed, they get Mark Zuckerberg level wealth. And that's like a normal pay package. And what this is doing is translating that to giant public companies. And it shouldn't work that well, right? Tesla's a car company. And it makes
theoretically
cars. And it can sell cars. And like now Elon Musk's incentives are to transform it utterly to make it an $8.5 trillion company. The theory there has to be like either he will succeed and we'll have a humanoid robot in every home and it'll be worth $8.5 trillion and he'll get paid, or he'll fail and he won't get paid and it won't like sell cars anymore. I don't like, you're sort of making these like very bold bets, and that makes sense when you're a startup and maybe makes less sense for a large public company, but maybe it makes more sense. I don't know. Maybe it's what the shareholders want.
Can you walk me through the psychology of the CEOs who canceled their moonshot
sure.
packages?
I mean, like the psychology.
Like you're just like, I'm not going to do this.
This is all stock options, right? Like the way it works is like you're optimistic. The board is like, we're going to pay you a lot of stock options that will be worth a lot if the stock goes up and be worth nothing if the stock goes down. And you're like, great, the stock will go up. And then the stock goes down and you're like, well, but I'm a nice guy. Like I come in every day. I work hard. Like why am I not getting paid? And the board is like, you're right. And they cancel your stock options and give you new stock options so you still get paid. And like the moonshot stuff is like that too, right? It's like at the beginning of the moonshot package, it's like you'll get nothing unless you 10x the company, in which case you'll get $1 bajillion, right? And then after 2 years, you're like, well, I'm not going to 10x the company, but like, I'm working hard. And then they're like, fine, pay some money. That's the psychology. It's pretty reasonable.
Yeah, no, it makes sense.
At some theoretical level, like this sort of like all or nothing bet creates the right incentives, but like, they're working hard. They're fine.
What an interesting article that landed on Monday. So I didn't fully appreciate it until Tuesday because Monday was a holiday.
The New York Stock Exchange and or related entities are building a 24-ish hour, 7-ish day trading idea based on blockchain.
Yeah.
Tokenized stocks.
And ETFs. You can trade them.
Walk out.
You can trade them around the clock.
ETFs.
They're building it.
They're thinking about it. It's in the works.
Yeah. I feel like we've been talking about the concept of 24/7 trading for a while.
Yeah. And it has the usual problems, lighter liquidity, fewer market makers at 2 a.m. What I thought was interesting about this story was that and I had never really like closely thought about this, but it's combined with blockchain, tokenizing stocks. And there is kind of a reason for that, which is that traditionally trade and settlement are separated. And in a world of business hours and sort of serious institutional traders, like you do a trade between 9:30 and 4 on a Monday, and then you get the cash and you deliver the shares sometime on Tuesday, and like it's all sort of like civilized. But in a world of like catering to retail traders who want to trade 24/7, like settlement is an obstacle there. Like it would be weird to do a trade at midnight on Friday and then have 3 days of like, well, the money hasn't landed in your account yet, right? Like, it's just not like the experience that you're expecting when you're trading 24/7, right? And so the Bloomberg story by Catherine Doherty quotes Michael Blaugrund at NYSE saying, "We think it aligns with the retail investor's emerging desire to be able to trade something at 5:04 p.m. on a Saturday and then use that money to buy something else at 5:05 p.m. on a Saturday, right? You can't use the money if you just like do a trade and then it doesn't settle, right? You're combining the 24/7 trading with real-time settlement. And the way to do that these days is by tokenizing and talking about the blockchain. It's not the only way to do real-time settlement, but it's the way everyone talks about it now. So.
Yeah. And also it's a language that I feel like the people who care about this know. The idea of blockchain, tokenization.
Yeah, that's right.
We actually spoke to Michael Blaugrund on ETF IQ, which is a television show, in addition to being my newsletter.
Never heard of it.
And he was talking about they're in conversations with a lot of crypto native firms who are really excited about this, but also some of the largest ETF issuers out there. And it's all about like getting their products in the digital wallets of the next generation investor. So that's who they're going after. And that's a language that they know.
Digital wallets.
Yeah.
Language I don't know, as we've already established.
So we'll see. I mean, they're in talks with the SEC. Yeah. It's not a done deal.
No. It's a pretty good time to be in talks about blockchaining a tokenized something.
Yeah. So were you saying that you don't think like tokenization is inevitable or 24/7 trading?
Oh, I don't think that tokenization is an absolute requirement for real-time settlement, but it's how it's going to happen, right?
Yeah.
If it's going to happen.
Because I was going to say like 24/7 trading feels inevitable.
Yes.
It's coming.
Yeah. Although it's always like 23 and a half,
Yeah.
You need like time to Reset the computers.
Absolutely.
But maybe you're done with tokenization.
I did like how you framed it in your column that I'm trying to imagine another app. Like if I was like a huge fan of an app on my phone and then it stopped working at 4 p.m. on Friday and I couldn't use it all weekend, it would kind of be like, what am I doing? Like, what? Right. Why?
Like, I come from a world where, like, yes, like you go home at 4 o'clock on Friday and you don't trade stocks for a while, but like that's not like an app native living on your phone world,
yeah,
right?
If
like,
you grew up on the internet and with these apps, then that doesn't really make sense.
So trade stocks all the time.
It's happening.
Like one possibility is you'll have very limited liquidity and lots of craziness overnight. But another possibility is like everyone will just put their traders on 2 shifts and, you know, like it's mostly computers anyway. You just need someone on the night shift to supervise the computer and like maybe it's all fine. Maybe it's fine.
I think it would be really fun to be on the night shift.
Just like the one person with a bank of computers that are like trading against retail degens all night long.
I picture a cozy dark room, the warm glow of your computer screen.
Right. You're just like sipping your tea.
Got my flannel.
Sure the lines aren't going down too much.
My flannel pajama bottoms on.
Right.
Yeah.
Right.
Sounds good.
I don't think, you know, I think that job will be like, you're wearing a suit and you're in Tokyo, but like it's possible.
Yeah, but that's not very romantic.
Well, it depends.
Yeah.
All
right. I feel like we covered a lot of ground.
A lot of ground.
Good luck. Good luck in the snow, everyone.
Good luck at the pub.
Oh, yeah. Thank you.
Let us know how it goes. And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on the close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis, Moses Andam, and Alexis Hott.
Our theme music was composed by Blake Maples.
Amy Keene is our executive producer. Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.